Private equity ain't the smartest guys in the room. They don't read their leases. We had one, we were watching them. We had their lease, and they had a renewal at $8,000 a month. The property probably leased for 18 to 20. As soon as that renewal lapsed, we put the building under contract. And then we called them. We're like, hey, sorry, you missed your renewal window. And
just a day.
They were pissed.
But you know what? They do it to you in a heartbeat. We've got a special guest today. Jeremy Mercer's out of the North Dallas area. He's in distressed real estate, and everybody's been harassing me to get back into commercial from when we talk about it online. Just haven't done a good job of that, but Jeremy does a lot of industrial. He does some other stuff too, but commercial distress is something that we don't focus on a lot. We focus on the acquisition side, but that's mostly all Jeremy does. We're going to talk about that today. Welcome, Jeremy.
Hey, thank you. Thanks for being here. Oh, yeah, there we go. Sorry, my bad.
So tell the listeners who don't know who you are, sum it up. What's Jeremy's business look like?
Yeah, so Matador Realty Investments. We're out of Plano. We own and operate industrial B and C assets. We own and operate about 1.6 million feet between Dallas and San Antonio, kind of off I-35 corridor. That's kind of our thesis. And then we also operate they call it a credit fund or it's hard money lending for commercial. So,
okay.
But yeah, no, we deal with a lot of vacant buildings type stuff, mark to market lease up situations, but yeah, it's there's got to be some kind of value add component we can do to it
that's where you get your juice.
Yeah, exactly.
I saw on the forum that about 200 mil in assets, more or less.
Yeah, we're probably about 300 now. So.
How long have you been in this business?
I've been in the industrial world for about 20 years. We started Matador in 21. So,
wow.
We consumed a lot of calories quickly. So,
so when you built Matador, you weren't learning as you go. You knew what you're doing. You came to execute.
Yeah, we had. So we have a commercial real estate brokerage in Dallas called the Mercer Company. My brother owns it. And, 20 years ago, my brother was at a company called NAI Robert Lynn. And when he was there doing industrial brokerage, he started buying these assets in the Stemmons corridor. And I started property managing them for him. And so that's kind of where I got my start. I knew the lease. I knew, how to enforce it, how they were structured. And then after about 6 years of property management, I was like, man, I don't want to do this anymore. And my brother had started the Mercer Company at that point, so I went to work there and started brokering. So I was just a street broker in Dallas, going door to door with industrial assets for 15 years, and I got there was at some point, I'd probably say 2017, 18, the capital markets world, whenever they come up with terms, money flows into it, right? So it becomes an investable asset at that point. And they came up with the terms of last mile and core and, urban infill. And that all pointed to my territory, which is like pretty much in downtown Dallas. And, so all this money starts flowing into it. And I just kind of was like, man, I'm making all these dudes money. And like I said, we'd always bought buildings along the way, but I finally was like, man, I want to create a platform.
This is my turn.
Yeah, I go, these guys don't know how to find deals. They just know how to find money. I need to figure out how to find money, and because I know how to find deals. And so I just told my brother, I was like, hey, I'm going to create a platform outside of here to buy these things. And so, so I created Matador in 21. We kind of started in 20, really, but, I really put a real name to it in 21. Mm-hmm. And just went from there. So,
well, you made some serious ground. So, in my world, typically distressed real estate means ownership problems, title problems, arguments and fighting with the owners, all that stuff, just judgments and liens, and that's what my distressed real estate looks like. But as I eased into the commercial world, it turned out to be building condition, tenant, and lease. That's the distress.
Yeah, it's
that's your game.
It is, but we do have all those same problems. You'll find those situations that you have in these commercial buildings too. But a lot of it can be CapEx, right? A lot of people, they don't want to fix their roof, which is a big dollar amount in commercial. And so usually it's an owner doesn't want to put the CapEx into a property that needs to be done. So we'll go do those heavy lifts. There's definitely a situation with the tenants. One of the best deals we ever bought was we got when the tenant was going bankrupt, and we went right in and talked to the owner and got the building under contract, and then they did go bankrupt, and it was a mess it took about 6 months to close it, but
People don't realize how long it takes to market a building, clean it up, get a tenant, and put it on autopilot, so to speak. And what they also undervalue is what it costs to carry the property, cover capital, all that kind of stuff for that time. It is way more than a rent house.
Oh yeah, no. And the other thing that I don't think you see, that you don't see like on the residential side as much, is what the city does to you. Like the city,
And they own you and they can drag you around.
well, they're a business partner that you have to have that you didn't sign up for.
And they're terrible at business.
Oh, they're
usually.
horrible. They're horrible. I own a truck terminal in Cedar Hill, and they told me I couldn't park trucks there.
What the heck?
I don't know. So
Actually, I had to sue the city of Shirts. I bought a metal building that'd been there since the 80s, and they said I couldn't use it for industrial. I had to use it for residential. So I'm talking to the director of development services saying, well, what should I do? And he goes, well, just tear it down and build houses. And I was like, you realize this is evidence. Like, I'm putting this in discovery. We're about to sue you. And he's like, oh, okay.
Did you sue him?
Yeah.
Did you win?
Yeah.
What did you win?
So this is
I'm fascinated by suing cities, by the way. So
I'll tell you this. I don't want to go too far on me, like today's you, but okay. So I bought the building, and the zoning was early on was industrial. The man who owned it for about 20 years. He was running a construction company out of it. He ran the thing, and the city came in and changed all this stuff, a new neighborhood master plan.
Okay, they put an overlay over it, yeah.
Yeah, all residential. Well, they gave him a notice. He didn't step up and say no, so it was like this blanket zoning change.
Yeah.
He kept running his business, no big deal. He closed his business and moved out and wanted to put a tenant in, applied for CO, and the city said, this is zoned residential.
Yeah.
So he underleased the thing for probably 15 years. I mean, just pennies for rent. It was terrible.
Yeah.
Finally, I came to buy it, and that was a mistake. I didn't realize that was the case. I don't know how I missed it, but someone else in my office bought it. And when it came to my desk, I'm like, 8,000 square foot, $550,000, good corridor, good condition. I'm done. Let's do it.
Sounds good. Yeah.
Well, I go to get this tenant in there. I get a national. It's like a tenant. They install underground cables. So they want to store a bunch of
Sure.
Great tenant, national credit. I'm like, dude, hold on. The city says no because it's residential. So I'm thinking, what in the world? So I argue the city for a while, no dice. Then they recommend that I apply for a zoning change.
Yeah.
I'm thinking, all right. So I do that. I go to the zoning board, and they have during their hearing, I tell them the problems. They recommend something. I don't remember, do a variance or something. But they called I can't remember all these terms now, but they caused a closed door meeting in the back. So we're all sitting here.
Yeah.
The zoning board goes in the back with the city attorney. The zoning board is a third party extrajudicial board.
Yeah.
They are not a city entity. They're supposed to be regulating what happens in the city and managing it. Well, they go back with the city's attorney, have a meeting. They were about to vote in my favor. They're all talking about it. They come out, bring a vote, all vote against me and go home. And I'm like, what just happened?
Yeah.
Well, they used extrajudicial evidence, I think is what it's called. They brought in evidence from the outside that wasn't supposed to be there. They went and looked at the property and used outside evidence that we all didn't have rights to it. That was a violation. There's another item. And then having that meeting with the city attorney, they were basically colluding.
Yeah.
So when they came back to me and did all that, we sent them a notice the next day that says, if you guys don't give me my zoning back, I'm going to sue you guys.
Yeah.
They just laughed. So I filed a lawsuit. Basically, I appealed. So it was really interesting. I didn't just get to sue them for damages. I appealed the Board of Adjustment's ruling and gave them the right to fix it. They gave them the ability to fix it because there's this process in a recently changed law. If they didn't fix it, then I had the right to sue them for damages. So I noted that in it. So then we started asking for discovery, and I'd found that they changed the zoning to a bunch of other people and were making them offers because they couldn't use their property anymore. They were buying 6 properties. It was owned by the freaking development services.
Yeah.
So I went back and started demanding discovery for all those deals, realizing like they were taking advantage of the public.
Yeah.
And then they suggested that I reapply for zoning. And I got my zoning, but I didn't just get industrial. I got maximum use, maximum density. I can outdoor storage, everything.
That's great.
And the tricky part is they didn't agree to settle with me. They recommended that, and I got it. When I got my zoning,
You dropped your suit.
no.
Oh.
I didn't agree to drop my suit. I said, thanks for the zoning. I'm $60,000 in legal fees. Now we got to deal with the damages.
Yeah. Nice.
Yeah. But
No, that's great. I'd love to hear a city get sued because they deserve it half the time.
most people are scared.
That's the biggest challenge with a lot of them. I mean, there's no reasoning with them either. Like it's I don't know. I mean, imagine if you had zero competition in your job,
Oh my
right?
gosh.
Like how hard you work. Like you have to come to me. Like I'm the only person. I thought that about railroads, right? I did a tenant rep deal one time, and I was representing probably one of the largest shingle manufacturers in the United States, who's a massive rail user. We have a rail going into the building, and the UP tells us, yeah, we'll let you know in 6 months if that's rail served or not. And I was like, and then I was in the airport like a week later, and I was sitting at the bar, and I saw a commercial for Union Pacific. I was like, why do y'all even advertise? Like, who's going to watch a commercial? I mean, they have to come to you, right? Like,
yeah.
it's that's the biggest challenge, man, because they'll just delay you. They don't know their own code, which I'm very glad ChatGPT is here now because it'll just read their code.
It's
for 'em.
shocking.
It's like, hey, well, let's just read your code. Here's what it says. But like, I mean, I have one property right now where I've requested a meeting with the city just to have a pre-development meeting. They won't give me one. It's ridiculous.
All right, let's get to the city a minute.
Yeah.
Let me back up for a minute.
Yeah.
Tell me what your company really does. I think I get a good idea, but listeners out there are
Sure.
young business owners who are building wealth
Mm-hmm.
and they want to buy commercial. What is it you do and how do they become this?
We buy I call it a very fairway deal for us is 20,000 feet on 5 acres. We look for a building where we have
multi or single tenant in that
single
20,000?
tenant in that space, and then we buy some flex business parks and own and operate those. So on the
Why do you like a 20,000? Why do you like that size of a building in a lot?
Well, it just comes back to when I brokered. That was what I brokered a lot of, and so I'm just very familiar with it. And a lot of it came to leasing, right? Leasing velocity on them was very quick back in the day. There's a section of Dallas that I work called Irving Boulevard, and I mean that's all. They call them iOS properties now, right? And so that's all that was, right? It was every trucking company, it was every equipment rental company. I called on all those deals, and I just did every one of them off market because I knew everybody. I was like, oh, well, you want to buy another building on Irving Boulevard? Okay, well, I'm going to go sell you this one down here. Then I'm going to sell you this guy. I was playing chess and checkers all day long, all there. And so, I mean, the perfect example was I had a building. I listed it one day in our office. It was, 10,000 foot shop on 4 acres. And I turned it in, and they asked me, they go, you're not putting a junior broker on this? I go, no. I go, this will be done in a week.
I know who to call.
Sun State. Well, I mean, I just put out there Sun State Rentals full price offer immediately and at least them, they've been in there for the last 8 years. So,
Nice.
And so I just the leasability of them was really quick. Now you don't want to go do that in Midland, Texas, because that's what every building looks like, right? Every building looks like 20,000 feet on 5 acres.
And they're half vacant right now.
Yeah. And so, but that's what we look for. And then those tenants tend to have multiple locations, so we can kind of follow them around. We'll work closely with our tenants' real estate department and be like, hey, we've got this building in this market, we've got this building in this market. We're signing a lease on one of our San Antonio buildings that we have leased with that guy in Louisville, Rockwall. We're working a deal in St. Louis with the, so it can be once you get, in with someone, it can kind of be more than just one deal. So.
See, that's like higher level. That's broader reach. There's a lot of relationship. That's, for folks that are like saying, okay, you're down the fairway deal. You can explain them as really good. 20,000 foot on 5 acres. What's something like that in a big MSA? Let's just say Houston, Austin, Dallas, San Antonio, maybe. What's something like that cost? What's it leased for? Like, how do you structure a deal like that so it makes sense?
See, let's see. We have a 20,000 foot building on 2 acres in Dallas. We bought it. Tenant went bankrupt. We seem to do very well with boat dealerships. There's a boat dealership, like we seem to, we get them out of there. Like one of them in San Antonio was a boat dealer, but we bought that one. We leased it up for, we paid just over $3 million. We're probably in it.
So $3 million on 20,000 square foot is $150 a foot.
Yeah, but we're probably in it all in at I'd say 3.6. After CapEx and all that stuff, leasing commissions, everything, holding it.
So call it $4 million. You're in it for $200 a foot.
Yeah, and we lease that for like $30,000 a month net. So
okay, so $30,000 a month on 20,000 foot, and then of that, let's see, how much of that would you guys? Well, I guess it depends on your ownership structure and but like a typical person, how would they structure that? A third down and 2/3 debt?
Yeah, we usually put 35% down.
Is that
Yeah,
because
so-
the banks want that now, or because you just want to cash out a little bit?
That's what we feel comfortable at, and it makes getting your loan a lot easier too.
On your typical down the fairway deal like that, how long would it take to lease in these big markets for you?
In the past, I would tell you 3 months. Now it's probably more 6 to 9 months.
Is that 'cause all the tariff stuff?
No, it's just the economy sucks right now. Their tenant velocity. Well, here's the other issue. Now you're getting all the big names capital in it. Blackstone's in it, JP Morgan's in it, Goldman's in it. Well, they've, when they go screw these things up, right? Because what it was a very inefficient market, right?
Yeah.
No one knew how to kind of no one worked on this stuff. So now it's becoming efficient, right? So now every brokerage house has an iOS team where none of these
squeezes the margins.
squeezes all the margin out of it.
This is what
And
happened to storage 10 years ago.
Exactly. And so now what's happening is they've discovered all these properties and they've bought them all at these high numbers because they thought they could lease them. Now they can't lease them at those numbers. What I'm seeing a lot of now is tenants are going, hey, we built our business like an equipment rental company. They're probably pegging 4% of gross sales on rent. Okay.
Okay.
And now they're looking at the rental prices going, man, we can't pay that.
So 4% of lower revenue is now this.
Yeah. So we can't, this store is only going to be able to generate, 15 million in revenue. We can't pay that kind of rent.
So now you got all these investors out there that have these higher bases, and they're gonna have to accept a smaller return or mark it down a little bit and exit.
Yeah, that's now they can take a smaller return because they have different capital structure, right? When you're dealing with pension and fund money, it's it's a little different.
Low single digit return.
Yeah, it could be a lower return, so it makes it a little tougher for the. But that's tougher, but at the end of the day, there's always a deal out there if you're hunting them. So
that's true. We learned that.
Yeah.
So like a guy like you, what kind of return would you be looking for that makes sense on a deal like that?
We need to stabilize to an 8 to 8.5 within 12 to 24 months.
And you want to sell it at like a?
We'll probably exit. We try to exit 150 to 200 basis points below what we.
So
sixes, somewhere in the sixes.
Okay, so let's say here 30,000 foot. Or $30,000 a month.
Mm-hmm.
That deal we're talking about times 12 months is $360,000 in rent divided by 0.08. So you'd want to be in it for about 4.5.
Yeah.
So then if you got 360,000 divided by 0.06, that'd be $6 million. So the difference, there'd be $1.5 million.
Yeah.
$1.5 million in spread on a deal like that.
Yeah. And
when you guys put those together, so let's say you're like a regular old dude, like, I don't know, some guy like me, who's getting into one of those, and you spend, if it's 4.5, let's say you put a third down, so you got $1 million, $1.25 million down maybe, and you got 30,000 in net rents, probably 20 grand goes to debt service. That might leave you about 10 left over.
Yeah.
120 grand a year off of about $1 million. It's probably 10, 12% cash on cash return.
Yeah. Mm-hmm.
And then one day when you sell it, who knows, depending on how long you hold it, depending on how the economy looks.
Sure.
You might make, you got $1 million probably in just your lift from your valuations.
Mm-hmm.
You might get another $500,000 or $1 million
cash flow, and then equity pay down, or so, debt reduction.
And then in your case, you might be doing 10 of them at once, 20 of them at once.
Yeah, so we try to look for like, kind, and quality so that we could exit them.
When you package them, they'll be similar.
Yeah. So that's how bigger institutions want to buy it. They want to buy everything put together in a nice little package for them. So
then you saying that makes me think that you guys sell a lot of them to that, or your goal is to sell to that.
We were fixing to, and we actually one of the bigger groups, they just couldn't get their stuff together. It was pretty irritating, but I think what we might look at doing going forward is, like, the problem is now is I can't buy these things as much anymore, right? Because everybody and their dog is buying them, and that's what's tough too. Is like now I'm not the cheapest buyer in the room, And the difference for me now is like this too. Like I had a building that was $3 million, had an environmental issue, dropped it. One of the larger funds came in. They have $1 billion in discretionary capital. They came in, they bought it, fought through the environmental issue.
Oh wow, they did the work.
Yeah, and well, they ended up whatever they did to fix it, it worked, right? It's fixed. But I'm competing with an acquisitions guy. He ain't the guy. It's not his money. He doesn't have to personally guarantee anything, and he has no co-invest. I have all those things.
You're like The buck stops with you.
Yeah.
The buck don't stop with him.
No, he could go be working somewhere else in 12 months, and it doesn't matter. But he just has to deploy capital.
What
So
kills me is
that's what
he'll
I'm
take a fee, and he doesn't really care how good the deal is.
It
If
doesn't
fits,
matter.
And he gets his fee.
Yeah.
He's loading up some group with a shitty asset and a bad price, but that hurts your ability to go buy another good deal.
Yeah. That's what I'm competing with now. So, and my thought is like, if I sell all my stuff off, I can't go keep. I don't want.
Got nothing left.
Yeah. So I think we're talking to some of the institutions about recapping us. So
That'll allow you to finance money out or change your interest rate and hold on to them.
Yeah. And I get my, we get incentivized through promotes, and, I get my promote, and then I get to ride again in the deal. So
if you refinance like a $50 million package and change your interest rate by 100 bips, which is 1%, what does that come out like? How much does that change your deal?
Well, I'll change the equity partners out too.
Oh.
I'll recap them. I'll recap the whole deal. So an institution will come to me and say, hey, okay, we're going to give a valuation of this. We're going to pay you this for this portfolio. Cool. We have an internal sale like that. I pay all my other equity partners off. And then, hey, we want you to co-invest, 5 or 10% into this new valuation. So I don't get all my chips off the table, but I get a lot of them, and then I go to the next ride. And then usually now I have an institutional partner, and then I get better interest rates. They might go get the debt, right? Because they can go get more accretive debt. So
they have all those fancy. When I talk to those guys, I'm like, God damn, you spend a lot of time learning those words because they sound smart.
Oh yeah, they're really good at them. So they're in their ivory towers. So
that's right. Everybody on YouTube is talking about having fun, including us. The difference is this ain't no TikTok dance. This is our business. This is what I do every day. This is how I earn a living. And if you think that sounds cool to have this much fun, play this kind of mental chess, and earn an outsized living, then you owe it to yourself to at least see what our coaching program's about. I train students every semester to rebuild their failing real estate business or create a new business if they're a W-2 earner right now. They both work great. So look, there's a link down below. Go click on it. Have a look at my video. It's going to tell you about the program. And if you think it's for you, get an appointment scheduled. Let's see where this goes, okay? Now back to the podcast. All right, so what we probably spend 50 to 70% of our time in our business looking for deals.
Yeah.
How do you look for these kind of deals?
We work a lot through brokers. We cold call a lot of brokers.
In my world, when brokers around like valuable commercial assets, when it's everything else, the brokers always mess it up. They don't mess it up in your world.
Well, usually we just get them. We just get me there. You get out of the way now. I got it.
So the brokers might. Oh, so the brokers are busy calling to get the relationships.
Yeah.
You come in and say, I'll close and I'll pay you move.
Yeah. Just let us. We got a process. Hey, go find a tenant. Go work on. Go find us another building. Like I don't need you to run a building process for me. So we have an acquisition team. They'll go in. They have a process. They do all these things during due diligence, and we meet about them regularly, and
describe when you would say, let's go your fairway deal again, 20,000 foot on 5 acres, main corridor, single tenant. What is it you're looking for in that? Like, what kind of rents do you want to see? What kind of costs? Like, what does that look like?
The rents is just a math equation, right? Like, give me the comps that support what we're going to go to market on this thing with. Is it a mark-to-market situation that,
So what you mean by that is maybe the tenants are paying half.
Yes, yeah.
And then you come in and rework those leases and get the tenants or a new tenant. It's hard to get old ones up double. Maybe get a new tenant to pay double.
It's tough. I've done it, but it's and I've got it no more than that, and then I've also lost them. So
all you're doing in that case is bringing the rents up, and then now this building isn't worth this; it's worth this.
Yes, yeah. So we look for those situations. We bought a deal this year. Private equity ain't the smartest guys in the room. They don't read their leases. We had one. We were watching them. We knew we had their lease, and they had a renewal at $8,000 a month, and the property would probably lease for 18 to 20. And as soon as that renewal lapsed, we put the building under contract.
Hey.
And then we called them, and we're like, "Hey, sorry, you missed your renewal window." And
just a day.
They weren't happy. They were pissed.
But you know what? They do it to you in a heartbeat.
Oh, they do it to us in a heartbeat. So it's funny. We, they're out of Chicago. My partner flew up there, and he was like, you should hire us to do advisory on all of your leases because you just missed this. So why don't you let us look at all your leases and do them, and we'll represent you on them all. So
Have to get a new client out of it.
we're working on it. It's a real need. They don't. I see it slip a lot in private equity because they're so concerned about what the business does, and that the real estate will get forgotten a little bit.
You made a comment about that earlier. There's a lot of times a business and a building commingled because the owner operator who works his career 20 years develops a building, builds his business in it, sells it off. Some big time PE guy in his fancy outfit comes and buys it, and he misses things, but he bought them both. And the weird thing is, I'm focused on the real estate, but you are looking at both.
Yeah.
And the PE guy might have both, but you might forget about the building.
Yeah.
That's to me, the good thing.
The building gets forgot about a lot, and it works both ways. I've seen it work a lot worse for the owner. What happens a lot with the business owner I see is they get, when they're done, and they want finality. And when someone comes in to take the business off their hands, the only thing of real value is the real estate. The best thing that business owner ever did was buy that real estate. He bought this building. I mean, I have a situation right now I'm trying to figure out. Guy ran a lumber company, sold to big publicly traded lumber company, got paid, but represented himself in the lease negotiations for them to lease it. They signed a 10-year lease with a 5-year fixed option.
Oh my God.
They're 3 years into it, and he's probably a third of market.
He can't. No one's going to buy that.
No one can buy it. If the building was vacant, it's worth $12 million. But on valuation on the rent, it's worth 3.5.
So what's a guy like that? So in the past, and I mean, we're very involved in litigation from our distress stuff. Sometimes I say, I don't even know how you do that. If you can find any hole in the lease that's big enough to run a pin through it, file a lawsuit and try to renegotiate.
So
what do you do?
We've done that. That's a tactic.
It's not the favorite tactic.
I mean, it's a tactic, but yeah, it's a it's a very jerk way to do it.
Yeah, it is.
But I looked at that for him. I sat down with him and I was like,
you got a $10 million delta, dude.
Well, I said, hey, have they made any improvements to the property? He goes, yeah. I go, did they get your written permission to do so? He goes, no. I go, great. I look at the lease. It says, hey, if we do improvements to the building and in 10 days you don't say anything about it, you've agreed to it. And I was like, okay, well, that one doesn't work. I go, you just signed the worst lease I've ever seen. Like, I don't know what to tell you, man. Like, I don't know how to unlock it. I'm trying to find a very long-term capital partner for it. He'll owner finance it to me, but I'm like, you got to owner finance it like at no interest. Like,
doesn't work. Yeah.
It's tough for you to walk with cash on this thing.
If somebody can sit around and figure out how to allocate the capital with a tiny return for 10 years, but get a massive return in the 11th or 12th year, they do it. But you got to have long capital, man.
Dude, I mean, at that point, just buy the S&P.
Right. Well, you do better. Yeah,
you'll do better.
Like,
you're right. It's like, why take risk? I mean, there's risk.
You know what? That's a good point. So early on in my real estate career, it was all real estate. Well, as I got a little bit older and smarter, a little wealthier, I bought a couple businesses. I'm actually more in the stock market than I ever imagined I would be. When folks are young in their business career, because that's what a lot of our folks are, and they're looking at the real estate like it's the best thing since sliced bread. Well, it is. But what would you tell them to look at? There's S&P. That does pretty well over time. What other investments, should they just be focused on this is real estate, focus on that and get great at it, or should they look at other stuff?
I think this is. Are
you focused? Have you spread that across, or you say we're so damn good at real estate, I'm not spreading it?
I'm pretty all in on real estate. I think my wife's about sick of it. Every time we sell a building, she doesn't get excited because she knows that I'm going to take that money right back.
Going back.
So, I think this is a question people need to really ask themselves. Are they a GP or an LP? And I think more often than not, you're probably an LP. And you think you want to be a real estate person, and this is how I pitch it to my my investors. They're like, oh, hey, I want to invest in real estate. I go, do you want to invest or you want to operate?
You want to do some work or you want to write a check?
Right. They're like, well, tell me what the difference is. I go, I operate.
We're going to meet a tenant tomorrow at 4 p.m.
Yeah.
Put it on your schedule.
Yeah. We'll see you then. Wait, no, what? Oh, hey, the alarm went off at midnight. I think someone might be ripping the power out of our building right now. Let's go find this meth head and see if we can get him out of the building because the cops aren't going to
I
come.
want to be an LP.
Yeah, it's a real thing. So I think for some people, maybe there's nothing wrong with being an LP. Like on our credit fund, we're LPs. Honestly, it's great. I make outsized returns, and someone else does all the work.
Kind of nice.
And
you can vet those deals as good as anybody, so you know how to make sure those deals as an LP are very safe for you.
well, you know what's great about those deals? By the time they get to me, they've been vetted out so hard because we're only dealing with build to suit developments with, major brands, Chipotle, Murphy's Fuel, stuff like that.
Oh yeah.
And so by the time the developer who's got skins on the wall has brought it to me, they've vetted out the site. They've been under contract for 6 months. The real estate department at Chipotle vetted out the site.
Dude.
Now it's coming to me. And I'm
All
like,
you got to do is sign the thing.
all I got to
pay
do is
for
look at, okay, let me see your pro forma. Great. Now, what it normally looks like on an industrial building is about like the dividend building that we, I mean, it just looks like a big glob of crap, right? What am I even looking at here?
I made that place look good.
Yeah.
I was impressed.
I wish somebody else thought it looked good because that thing's vacant. So, yeah, that's a funny story. We should tell that because we were talking about that earlier. But yeah, I bought that, and I just remember we posted it, and you're like, "Yeah, I was gonna buy that, but you paid a lot more than I would have for that thing." And I was like, "Yeah, whatever, man." And then like here I am a year later, I'm like, "Damn, I think he's right."
So all of our stuff, like I said, is like extreme tax delinquent, fighting owners, like just the train wrecks. So that deal came to us referred from another guy who was beating the block for houses in town and stumbled across it somehow.
Yeah.
So we go to meet them. We go to meet with he's like a hand for the owners, I guess a helper or a friend who's going to walk us through it. While we're going there, someone from CPS was shutting off the electric literally while we were there. And I'm just like, guys.
Yeah.
So we walk it. I mean, it's filled to the ceiling with these plastic pellets from the Toyota manufacturing plant to make interior parts, stacked to the roof.
Yeah.
And the back, I think used to have asphalt, but it was all dirt and water. And I just remember looking at this thinking, oh my God, we got like $100,000 to haul out all this junk. But I remember thinking, foundation looks good. Structure looks good. You might need some electrical. But even if you have to need plumbing, it's just a drain line to toilet or two.
Yeah.
It was all open warehouse.
It wasn't as heavy as a lift as it looked like. There's some functionality challenges with that building that I think make it difficult for.
Yeah, you said something about the docks.
Yeah, the docks weren't like a true 48-inch dock high, and they weren't grade level. So it's like you're either a distributor that needs true dock high, or you're a service type group that needs grade level, and it's neither.
Somewhere in the middle.
Yeah, so it's you're looking at digging a dock well. The other issue that's really happened with that property is the tenant across the street, Dow Kia. They have like 100 employees. They park. I mean, I've had to like kick them off my lot.
Oh.
And so I think it's a big deterrent when other tenants show up and they're like I mean,
deal with this.
people have almost like my property managers. I mean, like you're gonna get hit by a car because you can't see anything. There's so many cars parked on the street.
Oh,
and so like
that's something you wouldn't really understand a lot of times.
Well, you couldn't account for that, right? Like that because their lease wasn't signed when we bought it. We didn't know who was moving in across the street, and now I'm trying to lease it to them. I'm like, we all just lease the thing
because Labatt was straight across the street of Lab.
No, Labatt's like one down over, but Dow Kia is now directly across the street from us.
Oh, that was like a 1970s vintage building,
yeah.
I think.
Mm-hmm.
So when we looked at it, they came into our office. They had if I remember, it was like 100 or 200,000 in tax liens.
Yeah,
some city liens. There might have been affidavit airships or something because one of the owners died.
There was an issue. They had an owner finance note too that was all messed up.
That's right.
So we had to like get that all fixed.
So we were emailing that lawyer.
Yeah.
My business partner knows that lawyer. We were emailing him saying, this is about to go into default. We tried to buy the note.
Yeah.
Like nothing worked.
Yeah, it was pretty messed up.
Well, they were telling us, they were sitting in our office, conference room one year, and I was like, look, I can give you, it was like $500,000 or $600,000. That's it, but I'll close tomorrow, the next day, whatever. I'll take it with all this junk as it sits. And he was like, well, we're talking to somebody else that's going to give us all this more money. And I hear that all the time. I'm like, these people are fucking crazy. They're trying to bluff. Well, then I was like, you know what? Well, I'm like, yeah, you know what? That's fine. Okay. I'm
Yeah.
like, they're always back.
They're
Well,
always
they never
back.
came back. I'm like, what the? And then I saw in the market, I'm like, dude, these guys made this building look beautiful. But I knew they weren't bluffing then.
It was us, unfortunately. But yeah, anybody wants a building on Dividend Drive, 15,000 feet on 1.5 acres, we got one for you. So.
Looks great. So
It's very, I'm shocked it hadn't leased, honestly.
dude, I got 30,000 foot building up in Mesquite.
Yeah.
We've had like 10,000 foot or 14,000 foot or something be vacant for a year, and that's a 3% vacancy market. What the fuck's going on right now?
Tenant velocity is way down.
We just signed a lease. We accounted for 4 or 5 months vacant, and we thought we were being generous. Dude, a year.
Yeah, I have a building in Fort Worth, and it's 27,000 feet on 3.5 acres, and Zone K, so I can put any use in it. It's the heaviest industrial use. Yeah, and I've been on the market for a little over a year, and I just leased it last week. I did a year deal. I did a year deal at 70% of what my underwrite was.
Okay.
Just like plug the hole. Like, we got to get this leased.
What I was about to ask you is, so I went back to the guys who found that deal. I put in the capital with them, and they were going to operate. So I went in and said, all right, guys, what do we do? Do we give them 6 months free rent? And then we go to the full prop, and at that point, we got our valuation.
Yeah.
How do we negotiate this? Do we lower the rate for the whole lease? Like, I didn't want that because we didn't get our value.
It devalues your building.
But I was just trying to figure out what in the world to do to get somebody in there, give them a year of fucking free rent. It's vacant anyway.
Right.
And those guys for a little while were like, a year of free rent? And I'm like, we already gave a year up. Who cares?
Yeah.
We just sit around for 12 months. We got it so cheap it cash flows at 1/3 occupancy right now.
Yeah.
So I'm like, who cares?
Yeah.
Well, we got lucky and someone just signed. And that's weird. I've been vacant for a year up there. Someone just signed. Same for yours.
Yeah.
Maybe the velocity's coming back.
I guess if you take your pants off, it is.
So how did you get them in? You said 70% is what you gave
Yeah,
them?
they toured our building, and I was like, I won't lose your deal. Like, you just tell me. And it's
what do you want?
huge company. So I was like, you tell me what you want. I'll do it.
How long did you give them that discount for?
It's just a 1-year deal. They're doing all the generators for the World Cup, so they need a staging area.
Oh.
And so it's and they're actually a tenant in another building of mine. And so I know their credit. And
okay, so you got 12 months to get your longer term tenant, but you're cash flowing while it's happening. Or
I'm bank was getting on me. They're like, hey, you're out of reserves. You need to capital call. You're not going to hit you're not going to match. You're not going to your covenants are going to be out. And I was like, hey, I got a deal. This is a 1.0 debt service coverage ratio. Y'all want to do it? They're like, yeah, do it. So yeah, it ain't all fun and games. It's there's some L's out there too. We haven't lost any capital on a deal, but it's
your returns can shrink. So
yeah.
I keep going back to this, like, what do people need to hear? And a lot of folks that are earning money and wanting to get into this stuff, they always think about the upside.
Yeah.
I got in, when I was younger, I had drug addiction, big problems, and I inherited like 7 figures from my grandparents.
Yeah.
And I thought I'm rich for life. I didn't think I needed to work for the rest of my life. Tell you how stupid young I was. I blew it all.
Yeah.
And then when I finally got a job again, I'm earning like, oh my God, this money has to last. And it changed the way I looked at money. When I started getting into real estate, I earned a couple $100,000 working the oil field again.
Yeah.
And I'm terrified. All I thought about was my downside. I didn't even think about profit. I'm like, if any of these real estate deals I can get into, if they can't lose any money any which way, I won't lose. And then what I did learn later is if I account for all the risk and I was 100% safe, when I do make money, it'll be a lot.
Yeah.
But I was worried to just get handed, and so many people don't think about it like that way.
No, I try to look when I walk in a building, I'm looking for the escape hatch. How am I getting out of this thing? Like what, and like Dividend, my thought was, hey, if we don't lease it, a user buys this. This is a perfect user building. The building has some inefficiencies that users live with to own their own property.
But they'll pay the most.
They'll pay the most.
Right in.
I can't get a user to buy it right now, but it's just a tougher market right now. But that's what I look for, right? Like, hey, what can I do? That building too, you could divide it into two tenants, Right. So there's you can plug some holes with it, but or you could have 3. You could have 2 in the building and 1 in the yard. So I just look at. I look at like, how am I going to get out of this? Like if I hit that oh shit moment, like how am I going to get out of this?
I got a back door.
Yeah.
So when you talk about what it takes to get a building like that, clean it up, get it ready, and that's this amount, I haven't heard you talk about developing or building any of your own. Do y'all do that?
We're fixing to build one right now. We have a site in Liberty Hill that we're going to build a building, and we have 2 sites in Cedar Hill that we're going to.
Did you set out to do that, or did a tenant situation come along? Why'd you choose that?
We got this building. This site has some buildings on it already, but we've had it under contract for a long time, and we had a ton of demand on the tenant side. But it really just needed to have the building there. That's the big challenge is having a site and saying you'll build them something. It hardly works out. It's kind of
that. I always see the signs.
It's like if you build it, they will come situation. But if you don't, it's all theory. So we're gonna spec a building there. It's probably the site's phenomenal. It's on Highway 183 in Liberty Hill. It's right across the street from the high school.
Oh, nice.
There's no equipment rental groups out there. It's perfect for an equipment rental. We were fixing to do a deal with H&E before they did their merger with Herc and got bought, and then all the real estate deals got
How big
paused.
would a building like that should it be?
It's gonna be we're building it to 10,800 feet because it's right under the threshold of having a sprinkle. So
okay, so call it 10,000 feet ish. What does it cost, excluding the land? What do you think it's going to cost to build that building? Roughly?
I think with site work and everything, it's gonna be around 2.3 million.
So that's $230 a square foot.
Yeah.
Or so.
Yeah.
Wow.
Site work's a lot of it though, right? But a lot of the rent, yeah. Well, it's just there's always
Let's say you had a pretty flat site. You probably be $175 a foot, $150 a foot.
I mean, the building part of it's going to be like 125 a foot.
Okay, that's a number. A lot of people are like, I got this land. What's it gonna take? 125 a foot.
Yeah, sure. They forgot it's $5 a foot in site work, and that's to the land square footage, not the building.
Gotcha.
So there's get the real bid. So the real bid. This is in brokering for a long time, very classic owner. Hey, I want to buy some land and build my own building. I would say out of 100 people that buy the land, one of them does it. The other 99 of them call us back to list the land for sale once they get their pricing.
Too much of a hassle? Or
it's just
it costs more than they thought?
Oh, it costs way more than they thought. We've got a guy that's running point on that. I mean, the guy's, he knows what he's doing. That's the other thing too. Like, if you don't know what you're doing, like, you're going to get eaten alive real quick on that stuff. Civil, architectural, foundational,
Oh, you're in a world that you don't even know. I tried to build some condos like my first couple years in real estate.
Yeah. It's a lot.
I'd sit down with these engineers and architects. They're saying all this stuff. And I remember thinking, I'm the guy that's paying them all to be here. And I am so confused right now. And I hope they can't tell.
Yeah.
It was terrible.
Yeah. Believe me, I have an owner's rep, and he worked at the Irvine company for 10 years developing. That's like, they're the largest developer in Southern California. So he's done it all. So hey man, you just run the process. You call us, give us updates. You tell us when we got to send money. So
you've got such an interesting skill going into putting together an operation like this because you've dealt with the tenants, and it's my opinion that that's the most important part of this whole equation.
Yeah,
because without a tenant, you ain't got no money. You don't have a deal.
It's just a pretty spreadsheet at the end of the day. It's a great looking spreadsheet, but if that building's vacant, it don't mean shit. Yeah. So that's the thing is, like, I know how to yesterday I was out in Louisville. I went and made 15 door-to-door calls for a building I own in Louisville to get it leased.
Did you get one?
I've got 2 tours next week.
Nice.
That's, it's like, hey, I need to lease my building. Like, I'm here. You want to lease this? Mm-hmm. Like, that's what it takes sometimes. So I don't like to buy anything that I couldn't, like, go get in the trenches. And
that's what's missing from broker work these days. I call all these big names, and I'm in a new market and got something I'm not in. And they tell you all that good stuff, and it don't happen. That is what's missing from a lot of the market these days.
Man, I'll tell you what, for a lot of your young...
Commercial brokers are the worst.
Oh,
fancy-ass clothes, working 2 days a week, don't ever answer phone calls. I'm like, what the fuck planet am I on?
Dude. So if you've got young listeners and they want to get in real estate, make a lot of money, one, you got to have a college degree. I think it's pretty hard to be in commercial brokerage without a college degree.
Oh, really? Okay.
And I think it's just, I think a lot of people, they are going to vet you and they're going to look at that. And if there's 5 guys calling on them and you don't, I think that's something we require at Mercer Company, like hands down. But like, if you just work 40 hours a week, It'd be amazing how much money you can make. This is pretty funny. My brother had one of his brokers come in, kind of doing end of year goal planning and stuff, and he was like, I want to do this much more in production. My brother goes, well, that's 20% more than you did this year. He goes, yeah. He goes, what do you think I should do? He goes,
come to work another day a week.
Work Fridays. That's automatically 20% more. It's like, wait a minute. Like, mess up my lifestyle. No, it's.
Why is it like that?
Here's why I think it is. It's not that life isn't that hard anymore. Like everybody, what was your first car?
A Nissan, 1986 Nissan Maxima I bought from my neighbor for $2,500.
Okay.
Mine was money I saved in my bike shop.
Did you have automatic windows in it?
Nope.
Okay. Do you see cars?
One of them didn't work.
Do you see cars anymore that don't have automatic windows?
No.
They all have AC, right?
Yeah.
Like everything, like you can be in a BMW for pretty reasonable.
Things are getting easy.
It's just like they're like, I made 150,000 this year. Like I'm good. Like
fuck. Like,
now you'll find some guys that are absolute animals. You'll find some guys they don't give. It's not about the money to them.
That's the guy that grew up undervalued. His parents weren't nice to him. He's got. Frankly, I think the chip on my shoulder that I got when I was young is the most valuable thing I have.
Yeah. It's I like to think we're kind of like the Rage Against the Machine of real estate. So
when you walked in, I saw this guy with like some muscles and tattoos. I was like, yeah. No, I'm covered in tattoos under this.
No, it's but yeah, no, I think getting into commercial brokerage is it's a hard living first couple years, but man, you make it. And you can do really well, but I mean, I got a property right now. I set my listing broker down on Monday, and I'm actually on the listing with them. And I said, hey man, you calling the neighbors? You called all the neighbors, right? Oh yeah. I get a call yesterday from someone. I'm like, hey,
the neighbor. I was like, you don't know anything about this property? They're like, no. They called me, and I was like, come on, man. This is like the easiest thing in the world. That's the easiest thing in the world to do, too, is you get a listing and you go walk next door. I can't tell you how many times I've walked out of someone's building with a signed listing agreement. I walked to the neighbor to the right and the neighbor to the left and sold the building. Before we list our properties, no matter what kind it is, we always check with the neighbors because some amount of time they're going to do it. It's their one shot to expand their footprint right there. Like, that's valuable. Yeah. Oh, it just hit me. I'll have to show you this address. We got a lot. I forgot about this. An industrial lot up in the Dallas area. Yeah. Tax sale, $425,000 in taxes. Yeah. Like, one of the guys showed it to me. It's maybe 4 or 5 acres. I'm like, no way. There's a lot in taxes. The appraisal district said it was worth like less than the taxes. So I'm like, Well, the guy that brought it to us was like, no, I think it's more I think, And so I just started ignoring it. They started digging, calling some brokers apparently. Turns out a broker says we're $2 million. Another broker says we're $1.5 million. So I said, hold on, are you serious? Yeah. Yes. So I'm like, all right, well, the tax foreclosure's happening in like 2 weeks. So we're going to have to pay $425,000. Yeah. So I don't want to do this on a whim. Like, this is real money. You need to know. I need to know. Yeah. Well, so the guy, I said, are you going to partner with us or not? The guy that found it, he goes, yes, I'm going to partner with you. I was like, all right, let's get to work on this. You start getting people on the phone and let's figure it out. Ask them what the sell it in 20 days price is. Yeah. Because if we sell it without having to pay the taxes, that's a great return without. We went and bought the deed from the owner for $7,000. We bought it subject to. Yeah. And I thought at this point, we don't have $400,000 risk. We got $7,000 at risk. Yeah. Let's see what we can do. He nails down a couple brokers. One of the guys says, yes, we can get it to market at this, blah, blah, blah. One of them says something else, 1.5. One of them calls a neighbor, not the broker, but our partner guy calls the neighbor, and the neighbor says, I was going to buy it to tax sale. I'm so pissed it's not going to go. He said, I'll give you $1 million and close in a week. He goes, I already started applying to the city to change a variance or something. Yeah. He didn't even own it yet. He was serious. Yeah. So we went back to the tax office and said, you guys made a mistake. Y'all did citation by publication for the owner. You didn't notice them. They said, we don't have to. We got alternative service by the judge. And I said, hold on. He was easy to get to. Type his name in the appraisal district and his house is there. You didn't need to get alternative service. You should have noticed him. If you don't pull the sale and go notice him properly, we're going to do a bill of review and kick this thing out 6 months and you won't be able to sell it. So they came back and were like, crap. So they pulled it from the sale. We got the contract. We closed on Friday. Yeah. $1 million. That's awesome. Good job. I was shocked. Deals like that don't happen in commercial like very often.
They do. They have you get like one. I think you get like one heater every 18 months. Man. If you're in the game pretty hard, you get one every 18 months.
Yeah, that literally in that I'm like, man. And then everyone in the office, one of the guys in the office is like, well, what if we take it down? Because if we can really get two, I'm like, nah. Our investment is $7,000.
Yeah.
This market kind of sucks right now.
Yeah. And it's raw land. Like
you got to develop the thing.
Yeah.
And the neighbor wants it. He's the best buyer in the world.
Yeah.
That's probably one of the best deals we've done all year long. So
that's awesome.
Take the money and get out of here.
That's awesome.
But it was industrial.
Yeah.
It was up in that neck of the woods.
That's great.
No tenants, no toilets.
Yeah. No. So,
but it's land. It's different.
Yeah. Well, I mean, but your neighbor solution, right? I mean, it's like literally just walk next door.
That's what I thought of. When you said neighbor, I'm like, man, them neighbors.
Yeah. So
all right. So I'm gonna go back to this avatar of some young guy. Our typical listener is 35 to 40 years old. So he's not that young anymore. They're building a business. Their income has grown a lot recently. They're like newer. And they're saying, what do I do? Do I reinvest my money in my business? Well, they're getting to the point where like they're getting a fair amount of it. And all these guys start telling me commercial real estate. You've got significant experience in commercial real estate. What would you tell them about commercial real estate? Yes, no, or if yes, how would you recommend to do it?
I think if yes, I would probably. I've always worked on asset class specialization. Some people are asset agnostic, right? Like some people are like, oh, I'll buy an apartment complex, I'll buy a mobile home park, I'll buy whatever. But I'm industrial, and so that's what we do. I've had people bring me hotels and stuff like that. I'm like, I don't know what to tell you, man. Like I don't.
Is that because you can do industrial with your eyes closed, but a hotel takes a lot of new work?
Well, it's just I've just never done it. I ain't got the rep, right? And then I got to work on what I can capitalize, right? Like I can't capitalize that. Who am I going to go to? Like, hey, I've never done a hotel before. They're gonna be like, yeah, that's cute. We're not, But like when I can walk in the room to larger capital and be like, yeah, I'm the expert in this. That's how you capitalize things in commercial real estate. So it could be neighborhood based. I would say if you're going to own and operate and touch it, you better be able to get there within. That's why we work I-35. Honestly, like if we can get in the truck and be down to San Antonio in 4.5 hours.
Oh, that's a good call.
So like, and we have third party property management down here. So, but in addition to that, I don't care if you have property management. Like you're going to have to asset manage these things.
What would you tell like those guys that are new? Would you tell them to property manage to learn, or would you tell them to go third party?
I would probably start doing it yourself because you need to kind of have all those L's. You need to have all those losses, and you need to understand why you need to have a COI like all the time. Like I just got out of a dog bite lawsuit, and thank God we had COIs all properly because insurance did what it's supposed to do. But you buy these small, that was in a small bay building we own. You buy that, those tenants aren't as sophisticated, right? Like they don't get their COI renewed. You have that happen. They sue everyone in those situations. So.
I'm being sued by an apartment complex for someone who claimed to slip through the stair right now.
Yeah.
And they want like $1 million for a bruise on her butt.
Yeah. Oh, yeah. They'll get $300,000 when it's all said and done.
Thank God we have the insurance.
Yeah. And so, understanding why the importance of that, understanding where you can violate them in a lease, understanding, what a default really is. And like, that's very important to operate these things, Otherwise, I think it goes back to, are you an LP, right? You just need to look for an operator that you can invest with that has a niche and do that. So
if I had to guess, a lot of the guys think they want to be a GP, and then they get in it and they're like, oh, I thought it was going to be a little easier.
Yeah.
I might really rather be an LP, but they don't know until they go through that.
Well, and like, it really comes down to, I hope you're into, I always tell people, always go, hey, so what do you do for a living? I go, well, I do commercial real estate, but I'm really a construction company. That's what we are doing construction constantly.
All the time.
Constantly. Yeah. I'm fixing to dig a channel out in Buda, Texas, because we don't have proper drainage. So I'm fixing to go cut 100-foot wide channel in someone's property so I can drain properly onto it.
All the stuff that everyone didn't fix, you got to fix, or that tenant don't work.
Yeah.
The bank don't want a loan. The buyer thinks there's something wrong with it, or the lender.
I had to deal my lender back down on me a week and a half before closing last month.
What happened? Why?
I don't know. Like he literally was like, it was our Liberty Hill site that I was telling you about. He was like, He starts calling me week and a half before closing. He goes, "Hey, we're going to need bank statements for liquidity verification." I go, this is we're too late in the game for that question. What is going on? You know? And he's like, "Well, do you have a budget?" I go, "You have an appraisal. How do you think they appraise the development? With a budget?"
I had to give him a budget.
Yeah. I'm like, "Are you okay? Like health wise? Like is something
Is there like a new guy on this file? Or
Yeah.
what?
And I don't know what happened, man. I think the guy just didn't, I think the guy like forgot about it and didn't get it done. And so then I'm scrambling.
So what'd you do?
I've got a partner that I was like, "Hey, I need
Oops.
$4.1 million by Monday. This is on Thursday."
You know what? That right there, I don't care who you are, who you say you are, who you think you are, who you look like. That comment right there that it could work means you've worked in this business a long time.
Yeah.
You've done what you said you're going to do, and you've continued to get results, because not many people can do that.
No, it was tough, you know, so we're recapitalizing it now. We're going to go get a new loan, and, you know, we're bringing more equity partners into the deal. But I mean, that guy put me in a bind. And
as much as you think you've got the experience and you're on top and you can cover everything, when you get off that phone call, you're like, "Son of a bitch."
Oh, dude, it was tailspin. It was total tailspin, you know.
So when people ask, should I go into commercial real estate? These are the things you got to think about. Should you be ready for this?
Yeah.
There you go.
Yeah. Now I know why your show's called Dirty Deeds. This is how dirty it gets, right? So,
it is.
Yeah.
You know, one of the comments that we made in the conference room earlier, I kind of want to talk about a little bit more.
Mm-hmm.
Everybody, I remember hearing all these guys that I came up with flipping houses and stuff 10 years ago, and we all went different ways. A lot of them are still flipping houses. And I hear them make these comments. I would hear them make these comments when the economy is starting to look shaky and interest rates are going up. They were all like, "I can't wait for the economy to fall apart. I'm going to buy everything."
Yeah.
And man, I ain't the smartest guy in the world, but I'm wise enough to know that I didn't think it was going to quite look like that. Because if it were that easy, it'd be that easy. Well, now that we watch the economy do its weird thing, it didn't look there weren't that good of deals out there.
No.
My deal flow was no better than it was when the economy was hot.
There was deals, but like nothing you would buy. Like, do you want to go buy a 1 million square foot office tower? Like, who wants to buy that? Like,
that's why no one is.
You couldn't give it to somebody just to carry the thing, you know? So like, I heard a lot of people saying, "Oh, I'm just going to sit back. There's going to be a lot of blood in the water." You know what? There wasn't, because banks don't want to take these things back anymore. They're like, "Hey, we did that. That was miserable. We don't know how to own real estate." And,
so then would you rather operate when a market is smoking hot or cooled off?
Man, I don't. So I've always said this. I'm not a speculator. So I buy in down markets, I buy in up markets. You know, this is our business. You know, when people were, you know, saying they're all pencils down, and you know, I think if you're creating a good marketing process to continually see leads, you'll buy buildings. You'll buy property, whatever it is, you know, to your point, whatever the avatar is you've created for you to be a real estate operator. If you know, business is very simple across all aspects. It's marketing, sales, fulfillment, and accounting. Like, that's it. There's 4 buckets. And like, if you can't market yourself to the right audience to let them know what you buy, and then you can't convince those people that bring you those things that you can buy it, and then you got to execute on it, and then you just got to collect, you know? And so,
you're saying make a good sense, make a good deal.
Yeah.
And if it's a good deal, I don't care what's going on in the market. It's a pretty good deal.
Well, it's like, I think beginning of this year, like we were like, all right, our goal is to buy $75 million worth of stuff. About the end of the first quarter, I go, if we bought 20 this year, I'd be really happy. Just because I was like, man, I'm just looking at everything, and it's just not right now. Like, but we'll still buy stuff. I mean, we bought a building 2 weeks ago. We've got 2 in title right now, you know. But you know, it's got to make sense for us to do it.
It's got to make sense. That's like the most simple statement, but like means so much. It makes sense.
Yeah, absolutely. So
I have a personal question, or it's personal. It's not personal, but it's about financing. So when we started doing this stuff, the first couple industrial deals, that's mostly what I've done. I did some apartments and other random stuff, but generally industrial in this office. But so I bought this little deal, resold it, paid cash. I paid $50,000 for it, resold it for $400,000. Smoking deal. The next one I bought for $1 million and sold for $1.1 million.
Yeah.
That wasn't what I was hoping for, but I did cash.
Yeah.
A couple of them, we ended up doing cash on a lot of them. And then as I started to say, okay, I want to own some of these assets for long term instead of flip them, I'd use maybe a local bank. They just charged me whatever the rate was, the commercial rates at the time. I'd put down between 20 and 30%, depending on recent or longer.
Yeah.
And the cash flow, and they made sense. I got some seller finance deals I'm happy with. Well, my daughter's friend's dad, I was talking to him at this event the other night, and he's like, yeah, we have a boutique lending firm here in town. They lend out insurance company money.
Yeah.
And I was like, okay, well, tell me about that. He said, we don't do any loans less than $1 million, not worth it. And we'll amortize it 20 or 30 years, but there's only cash flow. You got to be stabilized, no spec stuff.
Yep.
Like, all right. And he said, we'd like you to do a third down. What else did he tell me? But the interest rate, this conversation was a couple months ago when the interest rates were higher. He was like, I can get you in the mid fives.
Yeah. But you got defeasance.
Wait, what does that mean?
You can't sell it.
Okay, so he said if you sell it, there's what did he call it?
That's pretty big prepayment penalty. That's what
and he said it's the delta from what your rate is to the market rate, because that's their cost of like opportunity cost. They got to rework it at that.
Yeah. So that's So there's some sometimes it's more punitive than that. You know, sometimes it's like, hey, we've got a 10-year lock on this money.
Oh shit. Okay.
So like you better be. You see a lot of insurance money like in your net lease world, like
McDonald's at 4 cap.
Yeah. You know, you're going to get insurance money and sit on it there for a while. But no, it's a real option. I'll tell you where there's really good money too.
Because the rate's cheap.
Yeah. No, we just got credit union money on a deal that we bought in New Braunfels.
Like and wait, how did you guys get credit union? Y'all like a fund. We were owner occupants. They'd give it to us.
They would do investor deals. We're not a fund on industrial side. We have a JV on our industrial, and we syndicate capital. Our credit fund is just all fund. We have a line of credit with another bank that we use on that. But each industrial asset we go deal by deal and get the.
So what do the terms look like?
We got it at 6.07.
Dude, that's
pretty good. Like it was really good.
How much? What percent do you have to put down?
We put 30. We always put 35% down.
So basically,
but we have in-house debt broker. You know, every time we do a deal, we put it out to about 40, 50 banks.
Oh my gosh! So you're probably getting the best stuff around.
Yeah, we're working it pretty hard.
Was that a speculative deal or was it stabilized already?
It's a mark-to-market small bay deal. So everybody's.
So do you cash flow enough currently?
It cash flows enough currently. You know, everybody's paying like $10 a foot. You know, they should be 15 to 17.
Ooh,
and
that's a good area. Then.
Yeah, and so we've already executed one lease in there at 17, and then we got a lot of roll in the rent roll. So, you know, it's so we'll go in and rework those people's leases with them.
It's a credit union, huh? I never even considered them for industrial.
Yeah, you can. They're kind of a pain to deal with, but you know a lot of times the banks getting the first one done is the hardest. You know, once you've established that relationship, and you know they're already getting your financials every quarter anyways. Then so you know they.
Interesting. So you guys have flexibility because you don't have the penalty. You know, I looked at that debt and said, a lot of these assets I would intend, unless something went really wrong in my life, I would intend to own them for 10 or 20. At my age of 44, I'd like to own them for 10, 20, 30 years. It'd be nice to keep. They're low enough price where they're not anywhere from like $1 to $3 million range. That's enough that me and one of my partners can do it.
Yeah.
We don't have to raise money.
Right.
Like, and we can cash flow good. Like, I like that.
Yeah. No, that's a great model.
But then the only negative is if you do have to sell it, then you got to pay a fee.
The one you're talking about though, I think they call it a swap maybe, and it's not too punitive, right? It's unless we just got a massive drop in interest rates, which I mean interest rates are going to come down, but they're not going to be. We're not getting back to 3%.
That's what I thought. Like, what's the risk of the delta being massive?
I mean, you're just going to factor that. When you get an offer, you're going to call the bank and go, "What's the penalty? This, okay." Will I eat that, or will I counter by this much money?
And if it's a super smoking deal and I got to pay an $80,000 penalty, that's probably not going to kill my deal.
It's not. So
that's kind of what I thought. Now, my partner, on the other hand, is like, well, he's a CPA.
Yeah.
Penalty?
Yeah.
I don't care if it's 1%.
Yeah.
An eighth of a percent. I don't like penalties.
Yeah. Yeah.
So we went back and
they're always looking for risk. CPAs and attorneys they don't do well with risk usually.
Yeah, we went back and forth on that, and I'm more of those guys like shoot first, ask questions later.
Yeah.
And he's the guy who's like, hold on, let me get the spreadsheet up. I'm like, oh, here we go.
Yeah.
Here we go.
Yeah. That's what, we got a guy in our office for that, to keep me from shooting from the hip too much. Be like, okay.
So is that your personality? Then you're more like Go figure it out.
I've been in so many industrial buildings. I'm like, it's just kind of feel like, yeah, we can lease this up. Probably not. Like,
You know something I think you have a huge upside because you've seen so much what tenants want, been involved in that.
Yeah.
When I would get a building, I didn't understand it well enough. And I would just say, tenants will take it. They just need a place to work. I didn't think they cared about how attractive the building was. And I was scared to put money into it because whatever I did, I didn't know if tenants would want.
Yeah.
So I wouldn't improve them for a while. And I had a really hard time leasing them.
Yeah.
So then I started saying, okay, I'm going to clean up the parking lot. I'm going to paint it. I might not do the new stuff inside, but I got to make it look nice because like they're a business. They actually care about how they look.
They do.
I just didn't understand that in the beginning.
Yeah, no, it's I always try to look at like what Prologis does. Prologis is the largest landlord in the world.
That's smart.
You
Copy
know?
them.
What do y'all do? You go in there, man, it's made ready, it's cleaned up, buttoned up tight.
Oh yeah.
So we try to do that. We don't execute it every time as much as I'd like, but it's a big mandate around our office right now. It's like, hey, we can't lose tenants over some bullshit like that. Stuff that we're going to end up doing anyways. Like, so
that's a good way to put it. And because you've seen it enough, a good probability the tenant's going to want this. I'll go ahead and put that.
Well, the other issue is then when you hire, so I will defend commercial brokers in this aspect. When you give them a piece of shit, they don't want to work on it. They're like, it smells like ass, there's needles outside, oh, hey, there's a homeless guy in the building again. Like, they don't want to, they're like, where's the motivation? Like, you as the owner want me out here doing everything to win for you, but you're not doing that for me. So it's kind of a misalignment. I've worked for a lot of those landlords where I'm like, hey, can we? And I always told them, I said, can we make ready the space? Well, what if they want different carpet? I go, I've never seen people negotiate neat and clean commercial grade carpet.
A middle ground I found is one of these buildings I had was all storage, and I went ahead and built a 25 by 25. No, it was more like 30 by 30.
Mm-hmm.
And I didn't really know where they'd want walls and all that. And I thought, you know what, fuck it. I'm going to make the outside wall.
Yeah.
And I put the storefront doors in the front. And I put, I haven't put them. I'm putting cabinets in the kitchen all the way to one wall. And when they show up, I'm going to say, draw me where you want the walls. The kitchen's got to be over here.
That's fine. We've done that. That's fine. Like we've taken a building back and it's like, this office sucks. Rip it all out, build a wall.
Yeah.
And but just show that, hey, we're here to do a good job. We just want to build what you want.
And it's enough to look, when they show up, at least they're going to see the outside walls and look good and be like, oh, I just needed some walls here.
Right.
I think they can. I was shocked that being a house flipper in the early days, no one had the vision, but I could go in and figure that out. With commercial, I thought people could figure it out. They can't. So you really have to you got to get it there for them.
Well, they want to go to tenants. A lot of the times they just want to go do work.
Oh,
they don't, they already have a project. It's called their business. They don't want your building. That's a project.
You're right.
I mean, it's
easy to forget that
because
we're like, it's just a couple walls, it's just a couple new doors, and they're like,
stuff.
no, dude, I'm trying to run a screen printing shop.
Yeah, they're like, that's cool. Like, I don't got time for this. Like, can we go look at it? I have another option to go look at. And so you got to kind of do all the things right to win. I think so.
That's a good point. So headed forward right now, market's kind of crummy. Interest rates are headed downwards. You've seen ups and downs, and none of us are perfect. But I'll ask you to try to forecast.
Yeah.
If you were to look out in the 12 months, 24 months, what would you speculate headed our way in the industrial market?
I don't know. It's pretty bad right now. I mean, it is. So I was on a panel the other day, and everybody was like, "Oh, great opportunity." It gets to me. I was like, "Well, I don't know what y'all are working on, but it sucks for me right now. The buildings are vacant. Tenants are not. There's not activity." What's interesting is people develop commercial buildings to the cost of capital, not to the supply and demand. I still do some brokerage work, and I had a 100,000-foot tenant rep assignment in the DFW airport. 65 options. Like, how do you even differentiate yourself when there's 65 100,000-foot boxes? Like, that's a problem.
Dang.
I think. I think
you can't differentiate.
You can't. You're just a box. You know what I mean? There's nothing.
What do you do in that case?
I don't know. I'll tell you what, though. Leasing brokers. If I bring somebody to their tenant, their leasing brokers, they call me 3 times a week. You know, you can tell the tides have turned, which is great because I always did tenant rep. It was always kind of fun kicking landlords' teeth in. So that's what I enjoyed. But it's I think there's some bloodletting to be had still. I don't think they've lowered interest rates, but it didn't do anything to the 5 and 10 year, and that ties a lot to what last time they cut rates a full point, a year and a half ago or something to like start easing it down, the 5 and 10 year went up. And most of our commercial debt's priced off 5 and 10 year spreads. So I don't know, man. I think businesses fundamentally have some issues with them right now. I think everything is so expensive.
I keep reading businesses have more debt than they ever had. They're having a hard time paying the debt, and costs are up.
Yeah, it is so expensive. I mean, if you
that's a problem.
That's a problem.
If interest rates have gone down, and they haven't. Usually, interest rates go down, and they that makes things move. And if it hasn't,
no. I think residential's slowing down. I mean, Texas we're somewhat insulated, but like, I think everyone's moved to here. You know what I mean? Like, all the Californians are here now. Like,
people move around, but maybe like the imports are done.
Yeah, I think the imports are done. Like, I just don't know that it's coming in at that clip that it used to be.
You know what that means? That means we just need to stick to our values. Only do a deal if it's really good, like you said earlier, makes sense. And don't get anxious. Don't get out of hand. Take a deep breath. Hopefully people are in a spot where they prepared themselves to like not have massive deal flow on this side for a little while. Just roll through it.
That's what I have. I have Trammell Crow's notes up in my office, and it says, "Just because you have the capital to do a deal doesn't mean you need to." Oh, and it's very true.
The way we say it around here is just because you could doesn't mean you should.
Yeah, so it does. It's the same thing, but
you know what I've found now that we're thinking through this, I haven't thought about some of this because I've been so just tied up in how we operate all the time. Over the last year, I've plowed more and more into stock market, and that's not something I'm traditionally interested in, but everything just is exploding. Yeah. And I haven't found the incredible deals. So the equity, I haven't pushed it over here into the industrial as much lately. I'm a real estate dude, and if I'm going into stocks as a real estate dude, what the heck does that say?
Yeah, it's you saw the guy that sold the Lakers. He sold the Lakers this year. He made like $67 billion or something. Or what? It wasn't 67. It wasn't 7 billion. Yeah, 6 or 7 billion. Sorry, but I think he paid like 89 million or 100 million for it. But if he would have just invested in the S&P 500, he would have done way better.
And that's so funny.
So then I was like, that got me curious. I looked up when Jerry Jones bought the Cowboys.
Oh,
okay, he put $250 million in, and that with the dividends reinvested over the last 40 years, the S&P's returned 15%.
So what is it better?
He'd be worth $7.5 billion. The Cowboys would be worth $7.5 billion. They're worth like 11 now. So
he didn't lose that much, but
that's different, right? If I had the ability to buy a pro football team like this,
I don't care what the S&P's doing.
This isn't about the money, but just from a standpoint of it's
really not that hard to get ahead if you just work hard, plow it in there, and don't do stupid shit. Might be okay.
Yeah, no, I'd probably be further ahead. I don't know.
It's funny how that works.
It's but I don't know. I've made some great rips too. So it's
I think
it's
one
part
of the
of
reasons folks get into this is the thrill, the chase, the excitement, like that deal high, like kind of like the way folks trade stocks or maybe play cards and stuff. Like you're looking to get an advantage, you're betting on yourself, and you're thinking, I'm going to do better than these guys with my skills, and I'm going to go try to find that.
Yeah.
And
I think there's a game aspect to it. It's fun. It's fun doing these things, and it's fun, negotiating deals and all that stuff. So I think there's that aspect to it too. But it's I don't know. As you get older too, though, you're kind of like I'm kind of tired. Like, you know what I mean? Like,
you're not that old, but I know what you mean. Yeah, I worked hard.
It's like how many? I don't.
I'm over here podcasting instead of underwriting.
Yeah, I look at sometimes now when people bring me I don't want a vacant building right now. Like it better be the best deal for it to be vacant because you
gotta go do all this work.
I just put the power back in a building. I had all ripped out. It takes employees to do this thing, and I love all my employees. They all fail at some point. you know, everybody does, they're human, you know, but like that could be, oh, we didn't put security on a building. Oh, great. Guess what? You didn't get security put on? Well, now we just lost $90,000 worth of power. You know what I mean?
Ugh.
So, you know, we had security on this building and they just cut right through it. But, you know, but still, you know what I mean? Like there's all these things that can trip you up. Like, 'cause you can't do everything, you know? So it's, you know, it becomes a people business, and that's what, you know, that's why we have a pretty small team, and that's the way I like to keep it.
You know, it's shocking though what you can get done. Like when you talk about assets under management, what you guys do, our business isn't massive. We have 25 people in here, but that runs all the companies, everything.
Yeah.
I don't foresee our business really ever being any bigger than that. You know, Berkshire Hathaway, I was reading one day, has like 40 or 50 people in their office.
Yeah. Makes sense.
Yeah. I have half with them.
Now they
but I
probably
have a tiny
they probably employ like multi-millions of people across all
That's
their
true.
companies, but
see, what's
yeah,
they're
they're
able to like, they're putting together teams, they're hiring the right people, they're getting good enough deals that they can afford that level of management out there.
Yeah.
And they got a management team in their office, and that's it.
Yeah.
That's pretty efficient and smart.
They're LPs.
Oh.
They know they're LPs.
And they've been in the game a long time.
Yeah.
Which let that money grow.
Yeah, yeah. So I don't know. That's where I see myself one day as like, y'all buying another building? Cool. I'll just put money in it with you.
Starts to get easier there.
Yeah.
So I actually get a lot of people messaging me about deals around, not so much Houston. I get a lot of inflow from the Dallas-Fort Worth area.
Mm-hmm.
These days I've just been sticking around here. I don't know. I guess I've been busy or whatever.
Yeah.
But if folks are running into, you know, 5,000 square foot building all the way up to 100,000 square foot in the North Dallas or in the North Texas area,
Yeah.
should they look for you?
Yeah.
What's
For sure.
the best way for them to get a hold of you?
Man, or just
Google search
email
Matador
us, just matador.net.
Matador.net.
So, you know, our emails are all just our first name at matador.net.
Easy.
So, I would probably start with Dylan. That's Dylan at matador.net. So, you know, Dylan's kind of our front facing, on our acquisition teams. He's kind of the filter to, he runs our investment committee and brings all the deals in through the pipeline. And so I would reach out to him first.
Okay.
So.
The more information you provide when you reach out to him, the better chance he's going to respond to you.
Yeah.
If you send an address and a price, he might not respond. Get everything you can so you don't have to do a lot of digging. Please, people, help me, help you, help him. Okay.
Yeah, that is 100. That is 1,000% true. It's, you know, hey, here's a building. Do you want to buy it?
I don't know.
I don't know. Sure, maybe. What? Like
in the early days, I would dig for anything. Today, I'd like something a little easier to deal with.
Well, I mean, I think it's like, you know, I think the main things you need when you bring someone a deal is like, hey, here's this building. Here's the story, right? Here's the situation with the seller. Here's how much I estimate is needed in CapEx. And here's what I think the thing can rent for. And here's the price.
Some of these guys may not have quite that level of sophistication because they're going grassroots right to the seller from like an ownership problem or tax delinquency. So they might be a little thin on that. But the story, I got the story.
Yeah.
Sure. And as much information as you can gather, that's what's needed. Because like these type of deals are usually not broker deals. They're direct to sell, and they usually be a little bit better.
Yeah.
But they're going to have like, got to figure some of that part out.
Yeah.
That's our audience generally.
Yeah. No. The more you, but to your point, the more you can provide, but you know, that's our joke, isn't it? I mean, and don't get me wrong, commercial brokers send it to us that way. That's like, hey, here's a building. Cool. Like,
Sweet.
Yeah. All right. You want to go to lunch? Like, I don't know. You know, it's
But not on Friday because I don't work on Friday.
Yeah. No. And probably not Thursday after 2. You know, that's about when happy hour starts. So no, the more it's, and I'll tell you this, there's some brokers we work with, when they send me something, I don't even read it because I know how dialed it is. I'm like, hey, when do we need to go tour it? Did you read my email? No, you brought it to me. I know you know.
I know you got your shit together.
I know you got. I appreciate it, but like I just I'll look at it, but like, yeah, you know, let's go look at it. Like I know you know
Trust
what you're
those
doing.
guys.
Yeah. So,
what would you tell guys and gals? Not that many gals watch this, but some. What would you tell them that are building their business, earning money, headed towards industrial real estate? A lot of them ask about it. What would be like the overall message you'd tell them at this point? They might be fresh and they're just headed that direction. What do they need to know? High level.
man, know your numbers. Know your numbers more and know how you're going to get it
How
out
do
of
they
by
get
your
them if they don't have? How do they get the numbers?
Man, there's a couple like underwriting courses out there that I think are pretty good. I can't remember what it's like, Adventures in Commercial Real Estate.
Oh,
That's
okay.
very cheap. It was like a $600 course for underwriting. I thought it was very good value. I bought it for one of my employees, but I mean, they go through several deals for you, and teach how to underwrite, but know how to underwrite, know how to estimate CapEx, get in touch with the brokers that work on that product and don't just call them once because you are nobody to them. And be very adamant. Like you need to business develop them just like anybody else would, and don't get upset when they don't call you back. Like the way they are business, they are calling on someone's business 100 times before they get into someone's door. You need
Same
to
for them.
It's the same for them to be calling that broker. Like, I mean, that broker needs to be like, and you know what? Sometimes I've looked at like if I want to go into new territory, I might just have to buy something. So I've looked at like, I'll just go buy a stabilized deal. But at least I'm in the market. And I can go to someone's office and go, yeah, I own that building over there.
Oh, and you got into the broker.
Yeah.
You're kind of there.
That was like, we had owned one building in San Antonio, but then I bought this 100,000-foot building in San Antonio.
Everybody starts calling you.
Yeah, well, I was like, this is a good deal. But I was like, this is a reason for our team to be down here a lot. Touching this thing, getting the value done to it. But everyone knows we bought it, And so they're like, okay, these guys are real. You know what I mean? So
in the game.
So, now we're probably about 300,000 feet in San Antonio. So
I'm going to back up one more notch again. What do you think about the San Antonio market relative to the other big MSAs in Texas? For industrial.
I think it's a great market. It's small, well, it's
7th largest city in the States, but it doesn't look like that.
Well, it's small compared to Dallas. Dallas, we have 1.2 billion feet of industrial.
Wow.
There's 150 million feet in San Antonio. So this is like a neighborhood in Dallas. So that's but there's some good brokers down here that we work with. There's there's every major tenant is down here. It's a major market for all tenants. So it's you're not it's not heavily concentrated like oil field or something like that. So I think it's a good market for all those things. It's rents are very similar to Dallas. Dallas has been typically cheaper than most markets for a long time. They're actually starting to catch.
Oh, because you had so much supply?
Well, just like Dallas wasn't that attractive back in the day. It was just another town. But now it's like becoming Wall Street of, we've got Goldman Sachs coming in, we got Deloitte coming. I mean, it's becoming this. I mean, it's LA now out there. Like when I was getting to the airport today, I was like, oh my gosh, I was in LA 2 weeks ago. I was like, we're in LA. We are in LA. This is just like driving to LAX the other day.
Speaking of that, a number I use, and it's like weird how these economics work across all the big cities. I always say my baseline is $10 a foot on like metal buildings that aren't massive. When you start getting up there, like in big square footage, go down like $6 or $7 a foot. Those are literally the two dummy numbers that I use to start right off the bat.
That's probably pretty accurate. Yeah. That's probably pretty accurate.
In the beginning, I had spreadsheets, all these pockets in all this town, and I'm like, let me start underwriting with $10, and if it's nicer, I'll change it. If it's not nicer, I'll change it.
Yeah, that's probably the simple math to it, man. Seriously, that's pretty accurate.
$10, I can deal with those.
Yeah. So.
Dude, well, this has been fun. Thanks for coming. I appreciate
absolutely.
it.
Yeah, that's a good time.
You got some interest in reaching out to him, North Texas market, also San Antonio. I guess I'd rather you call me, but you can call him because he knows he's doing more than me. I respect that. I'll put his info down there in the comments. Thanks for coming in today.
Yeah, absolutely, man. Appreciate it.
My commitment to you is to deliver the most interesting, messy, and profitable real estate deals on earth. And in exchange for that, I only ask that you subscribe to this podcast and share it with a friend who can benefit.